please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, there goes the bell, and it's a 0.2% gain. Now quarter percent, so 24 points higher on the Nifty. Between 24 and 25. Sensex is up about 112, so that's a third of a percent higher. I guess higher weights for ONGC would be doing the trick for the Sensex, and ONGC is the biggest gainer on the Nifty as well, 1.2% higher on that stock. L&T is following after yesterday's, fairly reasonably optimistic, cautiously optimistic statement from the management that the last 2 months have been very good. So 0.8% higher on L&T, followed by Axis up 0.76, Asian Paints 0.7, GAIL 0.6, Adani Ports, UPL, Sun Pharma, Dr. Reddy's, SBI, all of them up about 0.5%. Well, what's not helping the index would be, I guess, the oil refinery stocks. Yes, they are there. BP, HP are both down about 0.3 and between 1/4 and 0.5%. Tata Motors is obviously pulling its weight in the red, about 0.9 down. I mean, not a whole lot down, you will have to say, in spite of the way crude is going. It's only 0.5% down for the oil refiners, and it's about less than 1% down for Tata Motors. ICICI Bank is in the red a bit, 0.6 down. Ambuja Cements, Infosys, HUL, Yes Bank, Tech Mahindra. Generally, the tech stocks are not very celebratory, given that the rupee is stronger rather than weaker. It's only a day's move that it is 6 pice weaker. So that's the story, really. It's a half and half market, but now, bang, in the first 2 minutes, the Nifty's gains have been wiped out by about 10 basis points.
Yes, it's a ho-hum opening for the mid-caps as well. Nothing great to write home about, up about 0.3%. The market breadth is good. By the way, I must mention, I think L&T is sitting at a new high this morning, 1285.
Yep.
Yeah, so that's pretty impressive there for L&T. A new high, 1286 rupees now. In the broader markets, a couple of stocks are hitting new highs as well. Jubilant Food is at 1856, so that's a fresh high for Jubilant Foods. You have GM Breweries that is at closing in on 1,000 rupee mark. So GM Brewery is also hitting a fresh high over there. Stocks that are in the news this morning, Nitesh Estates up about 20% on the back of reports that some funds are looking to buy into Nitesh Estates, so 20% over there. You also have SJVN, board meet on Jan 8 for the buyback, Bank of Maharashtra, where there's preferential issue there, so all these stocks looking good. In fact, talking about PSU banks, UCO Bank and Dena Bank are also moving with some strength this morning, so there are trades taking place there. Idea fundraising to the tune of $500 million is what my colleague Nisha was talking about, so Idea could be in focus as well, up about 0.5%. Ashok Leyland, the management spoke about a 17 to 20% growth in tonnage recently, and the street likes that, so up 0.6% there. And some bulk deals, influential investors buying into names like Navkar Corp, Arrow Granite, etc. So those stocks are also moving with some strength. Otherwise, Lata, it's a largely flat opening, consolidating like we've seen the last few days.
Let me add some flavor to what should actually be a breakfast show, Tasty Bites. What's happening to that stock?
Are you hungry?
Well, I guess an investor will be hungry looking at this. I mean, it's a vertical. See, it's not a. It's a low volume stock, but the volumes are now outpacing their normal volumes. Okay, not a great deal in terms of volume, but I think the intraday of that stock, if you pulled up a 1 year or even if you pulled up a 3-month, it's a vertical climb that that stock is seeing. I don't know what's happening over there. Probably more hungry people out there. Okay, with that, let's get our tech gurus in. Ashwini, what do you do with this opening? Is it calling for a short actually?
Well, I think the Nifty futures premium is coming off, so definitely people are going short, particularly on the financials. PSU banks are again coming under the hammer. So this opening may be a little deceptive because it's not gap down, but definitely there's selling from higher levels, and the post market highs are getting sold into. So the idea should be that you focus on financials for going short. Hopefully we can break 10,430, 450, and then get a bit of a trend. Maybe market is finding that sort of macro news to latch on to. So my call would be to get short on this market immediately both on Nifty as well as Bank Nifty.
Okay. What would your call be, Sudarshan? Your Lakshman Rekha was 10,420. Would you wait to short there? Is there a now trade on Nifty?
No, it's much safer and easier to short below 10,425, and that will be a swing trading or a positional short, so that's not an intraday short. Wait patiently. If the Nifty is going to go down, it has to break support levels, and that's where we go short. There is nothing to buy.
Okay. Devin, I wanted your thoughts on some of these agri-related plays, because there's an expectation that this time it would be a largely agri-focused budget. Anything in that space that you're optimistic on?
Well, Sonia, I don't know, I think what budget can probably create for the agri companies, but in general I believe that with the river linkages plan progressing well, I think with the irrigation I think happening into the fields, I would rather think that I think many companies which are basically operating into the agri input subjects, I think they could possibly be the beneficiaries, and they would include the likes of Jain Irrigation, they would include the likes of UPL from the investment perspective, but not too sure whether I think one should buy them purely from the budget point of view. I think they are looking good from the investment point of view over a longer period of time.
Fair point. Devin, thank you very much for joining us today, and have a great 2018 yourself and everyone at KR Choksey. Ashwini, your big call for the day?
See, just like I said, you know, get short on the large indices, and also on PSU banks, smaller ones, Syndicate, Allahabad, you know, NBFCs like Canfin, Home, etc. Because financial seems like they are going to have a rough day.
Okay. Mitesh, anything that's moved into your radar?
So I think crude is helping Oil India a lot. I think it's managed to get past its earlier zones of 374, 376 level, and now I think it will be a buy with a stop below 374. I think 400 should be tested over here. But that about, I think I would short the Nifty if we start getting below 10,420 levels. I think very similar to what Sudarshan was highlighting. I think that's where it's a safe time to start taking some kind of short exposure.
Okay. All right. Gentlemen, thanks for joining us and taking us through the market opening, which is absolutely flat right now. So let's invite our market master for the day. Tushar Pradhan, the CIO of HSBC Global AMC India, joins us now to talk about his expectations as we head into the big union budget and the earnings season. Tushar, good morning and Happy New Year to you. The one thing on everyone's mind is the possibility of a big fiscal slippage this time around because of a whole host of issues, including the way crude is surging. Do you think this would be a big deterrent for the market if it comes through?
Well, I think in the past, I think history just tells us that the stock markets actually does work on earnings and earnings alone. While all of the macro events and what happens to the fiscal situation is something of a concern, and the market does react in the short term, I'm not saying no. But if you see that we've had very record fiscal deficits, we've had near collapse situations from a government finances point of view. We have had very high interest rates. We've had very high inflation. And if you look at the compounded return of the equity markets through all of this period, this has been excellent in terms of the mid-teen kind of average return that we've got through then. So I think from a longer term perspective, fiscal slippage, and we're talking about a very, very marginal slippage, if any, and that's an estimate. One doesn't really know whether that actually going to come. I don't think the equity markets in the long run are going to be anyway affected by this.
Okay. Good morning, Tushar. But we're seeing this repeated resistance to 10,500. Will 2018, or at least the first half, be a period of consolidation at all? Or do you think it's there will be enough fuel in the earnings to take it past?
Well, it's an interesting question, Lata, because it's about which aspect do you focus on. So there is in any market valuation, and there is something supporting the valuation, which is the earnings. Now, last year we saw valuations actually take a re-rating upwards, which means given the fact that there was no earnings growth, you saw valuations continue to go up, which means the multiple is what actually has given you the return. So if you were to say what return did I get, and if you decompose the return of the market, most of the returns have come from the re-rating. Now going forward, the expectation is that the earnings are going to come back. Now, there is going to be a midpoint between where the elevated earnings P ratio and the earnings growth actually do match and come together. If I were to be a theoretician and to say that, the market always will trade at a fair value, that's somewhere where it is right now, which means that once the earnings actually catch up, you will find a normalization of the P ratio over the last 15-year average. Now, having said that, normally, if you were to take this as theory, then you would think that the market will consolidate here. But the market is never, driven by theory. I think what will happen, of course, is there is going to be some volatility. I believe that is because of all the news flow, which is so now, I would think, jammed up in the first half of the year. So you've got a budget coming up, everything to be curious about what the slippage is all about. You've got a lot of elections coming through the entire year as such. That will always lend some volatility. There is external geopolitics all across the world, which also makes this a very interesting time to be. This doesn't really seem very benign as opposed to when we look at the last year where we called it a Goldilocks situation, where you had low interest rates, low inflation, high growth across all markets, and fairly benign external. I think this year is clearly going to be a lot different than that. So that would tend to, point to the fact that maybe we will see about a volatility before it starts to balance out again.
In fact, that's what we're seeing in the market right now. It's just about treading in the green line. Looking pretty edgy, the screen, you'd have to say. So names like Tata Motors, ICICI Bank, HUL, Yes Bank, Infosys, all dragging the markets to the lowest point. And as Ashwini was also pointing out earlier, 10,500 seems to be a firm resistance now for the market. Tushar, I know we're talking about a lot of caution in the system, but the one positive data point that we got over the last couple of days is the way the manufacturing sector is picking up. The PMI data was strong. The commercial vehicle sector data was extremely, robust. Do you think this is something that's just a one-off, or is this something that could turn into a positive trend?
Yeah, again, a very interesting question, because if you look at what happened last year, the level of benign market atmosphere was not very visible at the start of the year or throughout the year. If you see, the news flow continued to bother people. So it was not as if there was euphoria. There was a lot of caution, and I think the caution persists into the new year. So this is, again, a very good sign from my point of view, where the hard data, like you mentioned, the PMI, the auto sales numbers, the hard data continues to be very supportive, but the market sentiment doesn't seem to be euphoric, which I think from a longer term perspective, and having been in the market long enough, is actually a positive. I would really be worried if everybody is excited, everybody is euphoric, and they think that it's just going to keep going up from here. That would make me worried. But I think currently the sentiment seems to be pretty cautious in the face of pretty strong hard data. So that's a good thing.
No, I take your point on that. Actually, we did have a mutual fund cafe, as we call it, over the year, and all the four mutual fund guys sounded exactly like you, pretty cautious. So perhaps, therefore, the markets are determined to climb that wall of worry. But Tushar, there could be genuine reasons for caution. Crude, for one, and of course, rising interest rates, because that also pulls up inflation. Actually, the Indian exports have not taken advantage of the global uptrend either. So you could pick holes in the Indian macro story. Is that a bother?
Well, there is always something to worry about. But I think your specific point about having to, look at what's happening to crude, I would still think that that's not really a very large worry. Simply because of the fact that when we talk about global growth, what are we talking about? These rates are between 2.5% to 3.5%, right? So it's not as if the demand for crude is going to shoot through the roof. We still don't see private capex at a level which we have seen in 2007, for example, where crude prices shot off to beyond $100 a barrel and stuff like that. So in a sense, I think even if it does harden a little bit, I think we get worried about the percentages, because the low that the crude price has gone to was like somewhere in the 30s. So when we talk about 65 or 66, we're talking about a doubling, so 100% rise, So, but I think in perspective, if you look at the average, take the inflation into account, then it's not really a very large rise in costs per se for most people. And on top of it, there is a huge amount of supply. If you look at the newer producing countries and the people who are really producing crude at this point of time are very desperate to sell it. So the supply is pretty strong, and it all really depends marginally about how much more demand you get. And my argument is that the demand that we are talking about is not really very significant. It might be sustained, it might be between 2.5% to 3%, but I don't think that's going to drive oil prices all that much, as we saw in the commodities boom 10 years ago.
Okay. Well, finally, Tushar, what would your positioning or relative weight be? Will it now shift in any fashion? If yes, to what?
Yeah, I think in the past, with lower interest rates and expectation of lowered inflation throughout the last year, there was a preference for holding financials and rate sensitives. I think there would be a little bit of kind of readjustment in that view because of interest rates, which have hardened for a little bit, remain here or inch up. Then that's a worry in that sector. However, with the new 10-year coming around and the possibility that the issuances will start to ease off, once the fiscal picture becomes a lot clearer, I think India, could see a possible leveling off of these rates. So, which means again, it's not really, in a sense, doomsday. I think there is a reason to get interested in the private capex story. I mean, we've talking about it for 2 years now. I think that this might just be the time to kind of focus on the orders which most of these companies have got, the kind of execution that we are seeing, the margins increase in the construction companies, for example. I think these are very early signs of a cyclical upturn, which eventually lead to private capex. So I think these are the kind of areas that I think one should start focusing on from what we were looking at for the last 2 or 3 years, maybe.
All right. Thank you very much, Tushar, for joining us in the new year, and have a great 2018 yourself. We actually have a very interesting conversation arranged after this chat with you as well. We have the Secretary from the Rural Development Ministry. As we count down to the budget, we understand that agri is going to be the focus of the government, and the Rural Development Ministry in particular has sought a 66,000 crore rupee target for the NREGS scheme, the Rural Employment Guarantee Scheme, which is 12,000 crore rupees more than the budget estimate of last year. Amarjeet Sinha, Secretary, Department of Rural Development, joins us now in CNBC TV18's Budget Corner. Mr. Sinha, good morning, and thank you very much for joining us. Are the numbers right? You are asking for a 20% higher bill?
No. In fact, as you're aware, last year the budget estimate was 48,000 crores for 17-18. And if you look at the medium-term expenditure framework, which was placed in Parliament in the last session, the medium-term expenditure framework had indicated 55,000 crores in 18-19. And if you look at the supplementary budget support, which is proposed and currently in Parliament, in 17-18, the total requirement of about 55,000 crores is what it is there. We have not projected anything beyond this because this is a demand-based program. It a lot depends also on how the monsoon fares in the coming year. If we have good rains, then the demand for work comes down. Also, along with the employment under MGNREGS, we have a major housing program, the Pradhan Mantri Awas Yojana, under which 10 million houses we are completing by December 2018. Our roads program is in full swing. We want to go beyond what we could achieve last year, 130 kilometers per day, move up further in 17-18 and 18-19. Because by March 19, we want to connect all the habitations. 82% we've been able to connect so far. And all these also generate a lot of employment. So overall, if you look at the financial transfers to rural India, in the last 2.5 to 3 years, there has been all put together a much larger transfer. Because as you are aware, even under the Pradhan Mantri Gram Sadak Yojana, we now have a state share also coming in. We have under the housing program some state shares coming in. So from an allocation of 50,000 crores for all rural development programs in 2012-13, This year, 17-18, we'll end the year at about 109,000 crores. To that, if I add the state shares and also the transfers from the 14th Finance Commission, then it's a manifold increase in resource availability, and a lot of that creates employment, especially wage employment as well in rural areas. And it's for this reason that if you look at the HSBC study or the other studies which came out on rural distress in trying to explain the rural conundrum, those who depend on wages, which is the poorer people in rural India, there the wage rate seems to have risen even in real terms over the last 1 year, which only confirms that all these interventions, public interventions, seem to be bearing fruit. And even in terms of the assets being generated, a lot of our thrust has been in MG and REGS on productive assets, on durable assets. We had a study by Dr. Manoj Panda of the Institute of Economic Growth recently, which again confirmed that our water conservation thrust has been quite effective.
So that's a many-sided answer. So we have several questions from it. But first, let me start by asking, therefore, can we say, I mean, obviously, as you say, it's a demand-led project, MNREGS. Therefore, should we work with 55,000 crore as the number? The likely budget number?
Yeah, to begin with, at the year, as the year begins, the medium-term expenditure framework had indicated that, and if I go only by the medium-term expenditure framework, which is placed in Parliament, that is what it had suggested at that.
No, but you don't have to go by that, isn't it? Your ministry can always ask for more if you found demand.
No, I think the final figures are known to nobody. I mean, at this stage, final figures are a matter of the final budget. But what we have as a document in the public domain at the moment is the medium-term expenditure framework, which placed it, which had suggested 55,000 crores in 18-19. That's where we are.
Okay. Mr. Sinha, good morning. The other big concern was the delay in wage payments, because despite that 48,000 crore budget allocation, there were reports that 19 states payments had frozen, 92 million workers did not get any wage payments, etc. What's the status check on that? And in the budget itself, is the government considering any proposal in order to sort of, speed up wage payments or change the wage payment methodology, etc.?
In fact, unfortunately, a lot of that information was not correct factually. The reason why I say it, we have been monitoring the generation of payments and timely generation of payments. You look at the site which is in the public domain, it's a transaction-based MIS available to everybody. 26% payments were on time 3 years ago. This year, as far as generating payments on time goes, in 85.41% cases, even today, this morning, you can check on our site, the payments have been generated on time. Now, payment generation on time means that if somebody did work within 15 days, the measurements and the fund transfer orders have been generated. The point which has been raised, thereafter, two issues. One was an issue that through the banking process, once the fund transfer order is generated, have we been able to reach the monies on time? We have started monitoring that as well with the banks, and there is improvement there. The other reason why in many cases where delay gets reported is not because the payment was not generated on time. It is for the simple reason that we have to follow financial rules as well. The general financial rules of government make it mandatory that any state, society or government which spends money, it has to submit the audited accounts of the previous year by 30th September of the next year. Now, after 30th September, release of funds to state governments can only happen if they have complied with all the financial rules, including submission of the audited report. So many a time that is the problem. But as I mentioned, if you look at the payment generation on time, from 26%, we have moved up to 85.41%. We are working very hard with states. Most of the state governments have submitted their audited accounts on time. But when there are discrepancies in the financial statements in a few states only, then what happens is things get a little delayed for that state. We are trying our best. We have worked out a checklist in partnership with state governments, explaining the requirements of financial diligence, because we would like our system to be completely accountable. Transparency is something which we have pushed. We have payments, 97% payments are on the electronic fund management system, only to ensure that we pay on time, only to ensure that there is full transparency. 6.7 crore workers have Aadhaar linked bank accounts. So the material payments also go to the vendor through the system of fund transfer orders. So our entire effort has been on transparency, besides, of course, the more than 2 crore assets which are already geotagged. So which can be seen by anybody in the public domain, actually.
No, I'll tell you what, sir. It was our Delhi team which gave us this number of 66,000 crore. And the reason why we went with that number, or, thought one would believe, is that there are a lot of trend fall in the number of jobs generated. Look at the approved labor budget. That's fallen from 258 crore in 17-18 to 225 crore. Person days generated so far was 220 crore in 13-14. That's fallen to 172 crore. Percentage of the total, labor days labor budget. On several parameters, actually the trend numbers are going down. Total number of individual households that worked. It was at 4.7 and it's fallen to 4.5 crore. So I'm asking you if you actually are asking for more, because more labor needs to be generated. After all, we have farmer agitations day in and day out in the capital.
In fact, yeah.
I'm quoting from your at-a-glance table.
No, this is where I think, the reading of the number. Yeah, I will respond to that. In fact, the position is as follows. The generation of work, the demand for work, as I explained, all other programs, housing program, every house that we are constructing under Pradhan Mantri Awas Yojana requires about 145% days of work. We provide 90 days under the MGNREGA.
Okay, sir, may I interrupt you? May I interrupt you, sir?
The road program, about 25% of the budget. Let me just.
No, I'm asking you.
Specific to Narega.
No, sir, I'm asking you this.
35 crore person.
No, is it that MNREGS therefore works not just by providing its own, labor person days, because by water conservation, bunding and other projects? Is it that you also count from Pradhan Mantri Awas Yojana? So is this number incomplete? Is it that, you'll also count, send some of your laborers to, Awas Yojana and Gram Sadak Yojana?
Yeah, in fact, this year also, 17-18, we will end the year at about 220 to 25 crore person days.
Okay.
I am saying this because April, the January, February, March months are months when demand for work will go up in some parts of the country.
Okay.
The demand for work, as you are you'll appreciate, is also related to the monsoon, how good the monsoon has been.
Okay.
We have faced a difficult year in 15-16.
Okay.
Our demand for work went up. We did 235 crore person days.
Yes.
16-17, again, 25% districts had drought-like condition. Even this year, beginning of the year, Tamil Nadu and Kerala had drought-like situation. Thereafter, some districts of Madhya Pradesh, some districts of Rajasthan and Odisha have also had the dry conditions. So wherever that happens, we provide for more work. We have monies, we have got additional funds at the supplementary budget stage. I'm saying this because somewhere or the other, our thrust has also been in diversifying livelihoods on a much larger scale. Besides what public expenditures we make, I also wanted to share that we now have close to 4.5 crore women in self-help groups. 3 years ago, they used to access about 23,000 crores of bank loans. Today, their current position is the total bank loan outstanding with SHG women is about 54,000 crores.
Okay.
What it indicates, a lot of this money is going into setting up of custom hiring centers, is going into small businesses and retails. So our skills program, for example, both through the RCT, the Rural Self-Employment Training Institute, even Narega workers, as you are aware, we started a program 1.5 years ago called the LIFE Project, where any MG and REGS worker who wanted to move up the skilling ladder, we have provided for skill opportunities, whether for rural mason training or for barefoot technician. So I would much rather look at the overall situation. And as far as MGNREGS is concerned, we go by the demand generated. The demand for work we are able to meet, and I assure you that we are geared to meeting it, and we ask for more funds as we did at the time of the supplementary budget.
We are actually getting a lot of positive statements from you, sir. I also wanted to talk a little more in detail about what kind of financial assistance will be provided by the Finance Minister in this budget towards farmer distress, because there is an expectation that the Finance Minister could relax the interest subsidy for short-term loans. There could be a 3 to 4% interest subsidy on long-term loans, etc. What should we expect?
You'll appreciate I can comment on the programs that I deal with, and about them, as I said, over the last 3 years, our budgets were substantially increased, including for MGNREGS. As a result of all the efforts over the last 3 years, what we find, and again I would like to respond, for example, the 1 crore houses under Pradhan Mantri Awas Yojana, Honorable Prime Minister launched it on 20th November 2016. We are hoping and we are reasonably sure that we should be able to complete all these units by 31st December 2018 or by March 19 at the latest. Now, this itself involves an investment of about 1,27,000 crores, central and state government put together. The Pradhan Mantri Gram Sadak Yojana, again, our budgets were substantially increased. The state shares together, we are spending 27 to 29,000 crores every year now, only on the roads program. So as a consequence, all I want to say is that in the livelihood mission, the bank linkages that we are now accessing are much higher. So all put together, the net availability of funds for wage workers or for skill related or diversification of livelihoods is much more now than we had earlier, and we hope that the trend will continue.
All right, sir. Well, that broad directional thrust is what we were looking from this conversation, and we got that. Thank you very much, Mr. Sinha, for joining us with a lot of minutiae on the government's thrust in the rural areas for employment.